For more than a century, one asset has sat right in front of us, ignored, dismissed, and misunderstood. An element so essential to modern civilization that without it, society would collapse in days. Yet it trades at a price more suited to scrap metal than the single most indispensable industrial resource on Earth. That asset is silver, and the world is about to wake up to a reality so explosive that when it breaks, it will rewrite everything we think we know about value, money, energy, and the future of technology. This isn't dramatic hype. This is cold arithmetic. Silver isn't just undervalued, it is catastrophically mispriced, to a level never before seen in human history. And the shocking truth is this: we are running out, not decades from now, not in some distant theoretical future. Right now, today, in real time, the world is stepping into the most aggressive energy transition ever attempted. Entire countries are replacing fossil fuel systems with solar infrastructure, electrification, and high-tech digital hardware. And powering it all is one irreplaceable material. Every solar panel needs silver. Every electric vehicle uses silver. Every data center, missile guidance system, satellite, battery, switching system, and medical device needs silver. It is the most conductive metal known to science. Nothing performs like it, and because physics doesn't negotiate, nothing can replace it. The world is consuming silver at a rate never imagined. The solar industry alone will require hundreds of millions of ounces every year, and that number is rising exponentially. Meanwhile, mining production is flat or falling. Inventories are collapsing. Governments and industrial buyers are beginning to panic privately, because they know what happens next. History is repeating itself, and every time this pattern has unfolded, the result has been violent. Every commodity crisis follows the same sequence. 4 stages that never fail, and silver is already deep into stage 3. That is why this moment is so dangerous. Because once the world realizes what's happening, once industrial users and investors collide at the same moment, price doesn't increase gradually. It detonates. Think about what you're about to hear, because it is the most important economic warning of the decade. For 40 years, silver was boring, stable, predictable. So much supply existed that no one thought scarcity was possible. People treated silver like an outdated relic, a forgotten cousin of gold. They believed it would remain cheap forever. Governments dumped stockpiles, mines closed, exploration stopped. Investors moved on to tech, real estate, and crypto. And that era of complacency created the conditions for disaster. Because while the world slept, demand quietly exploded. Solar was once a niche industry. Now it's the fastest growing power source on the planet. Electric vehicles were once luxury experiments. Now they dominate global manufacturing plans. Data processing, military hardware, robotics, AI infrastructure all require silver in growing volumes. We are consuming more silver than we produce. The gap is expanding every year, and the supply response doesn't exist. Silver isn't like oil, where drillers can ramp up rigs. It isn't like wheat, where farmers can plant more acreage next season. 70% of silver production comes as a byproduct from mining other metals like copper, zinc, and lead. You don't get more silver unless you expand those mines. And those industries aren't expanding. Mining investment is collapsing worldwide. In some regions, declining ore grades mean miners are pulling more rock to get less metal. It takes 7 to 10 years to bring a new mine online, and most planned projects aren't even approved. We don't have 7 years. We barely have 7 months before deficits grow too large to hide. Right now, global inventories held in major exchanges, the silver that industrial buyers rely on for guaranteed supply, have been drained to the lowest levels in recorded history. We're not talking about a small dip. We're talking about a structural collapse. Millions of ounces disappearing every month. The available supply on paper markets is being stripped bare, and when those inventories reach zero, the entire pricing system fails. Because here's the uncomfortable truth: the silver price you see on your screen is an illusion. It is controlled by a paper system. For every ounce of real physical silver, there are roughly 100 ounces of paper claims pretending to represent it. That means 99% of supposed silver ownership is just digital IOUs, backed by nothing. As long as nobody asks for delivery, the illusion holds. But once physical demand spikes, once factories, governments, and investors simultaneously require real metal, the paper edifice collapses. That moment is approaching, faster than anyone expected, and when it hits, the market won't adjust gradually. It will break instantly, overnight. A single announcement from a solar panel manufacturer that they can't secure enough silver will create a global panic. Corporations will hoard the remaining supply. Governments will intervene. Exchanges will rewrite rules. Delivery will be suspended. Contracts will be cashed out instead of fulfilled. Investors will discover they never owned real silver at all. This is not speculation. This is the same script we've seen replayed across history. Oil in the 1970s, wheat during the Irish famine, palladium in the early 2000s. Every time the world moved from denial to panic at lightning speed. Prices didn't climb, they exploded. 10 times, 20 times more. And now that same cycle is unfolding in silver. But this time is different, because no previous commodity crisis was tied to the survival of the global energy system. If oil ran short, society slowed but didn't collapse. If wheat ran short, other crops substituted. But if silver runs short, solar stops, EV production stops. Defensive technology fails. Grid infrastructure freezes. Industrial systems break. We are entering an era where silver is more important than oil was in the 20th century. It is the core mineral of the next energy empire, and yet it trades today at the price of cheap metal scrap. That is not mispricing. That is insanity. And insanity always ends the same way, violently. This video isn't about fear. It is about seeing the pattern before the world wakes up. It is about recognizing the most mispriced asset in modern economic history before the market corrects the mistake. Once that correction begins, the window will slam shut. Those who recognize Phase 3 transition to Phase 4 will witness a wealth event unlike anything in our lifetime. Those who remain asleep will look back wondering how they missed it. And now that the stage is set, let's walk through the evidence. The hard proof that silver is days away from ignition. Before we dive into the hard numbers proving that silver is entering the final stage of this cycle, you need to understand why almost no one sees this coming. Because if something this enormous were obvious, the price would already reflect it. The reason the world is blind is because the silver market is built on illusions, assumptions, and engineered complacency. For decades, a small group of financial institutions have controlled price perception through paper contracts divorced from physical reality. They built a system that could suppress price indefinitely, for as long as physical supply remained abundant. And that system is now failing. This is where the story turns from simple supply and demand into something far more dangerous. For years, major banks and institutions have shorted silver using leveraged derivatives, futures contracts, and opaque financial structures. Why would they do this? Because cheap silver benefits the existing global financial system. A strong silver price exposes weakness in fiat currency. A silver breakout is a stress test of trust itself. And those who profit from debt-based monetary systems need to delay that reckoning for as long as possible. They could suppress price when physical inventories were plentiful, but they cannot suppress reality when the shelves are empty. Paper contracts don't create atoms. Financial engineering can't manufacture physical metal, and we have reached the moment where math overwhelms manipulation. Industrial demand is colliding with shrinking supply. Investors are silently accumulating, mines cannot scale, and inventories are draining at an accelerating pace. To understand how explosive this becomes, imagine a lifeboat with 100 passengers and one life jacket. As long as no one panics, the system functions. But the moment someone reaches for the jacket, everyone reaches. That is the silver market today. 99 people think they own metal. Only one actually does. When recognition hits, prices do not adjust smoothly. They gap vertically. You may be wondering, how close are we to that recognition moment? The answer is closer than anyone believes. In private industry circles, there is already deep concern. Solar manufacturers are signing long-term off-market supply agreements. Automakers are quietly renegotiating procurement contracts. Defense suppliers are pressuring governments for strategic reserves. These actions are invisible to the public because industrial buyers don't advertise scarcity. The moment they admit panic, price explodes and they lose negotiating advantage. But you can see the warning signs if you know where to look. Premiums for physical silver bars and coins over the spot price are rising sharply. Delivery delays are increasing. Wholesalers can't replenish inventory fast enough. Industrial users are pulling metal directly from exchange inventories instead of waiting. These are red flags. These are stress fractures forming beneath the surface. The system is creaking. Here's the part most people miss. The largest part of silver demand cannot slow down or be reduced. Governments worldwide have passed energy transition mandates requiring massive expansion of renewable power. Solar capacity targets are written into law, backed by billions in subsidies and political commitments. Corporations are required to meet renewable energy quotas. Utilities are legally obligated to shift generation. These are not optional initiatives that can pause because silver gets expensive. They are structural, irreversible policies backed by regulation. That means industrial demand is price insensitive. They must buy silver at any price. At the same time, investors are beginning to rediscover silver as monetary protection. Inflation has eroded purchasing power worldwide. Governments are drowning in debt. Currencies are devaluing. Trust in financial systems is evaporating. When fiat confidence cracks, people flee to real assets. For centuries, gold was the first step in crisis protection. But silver historically moves faster and harder because the market is smaller and more leveraged. A small shift in investor allocation can ignite a massive surge in price. The critical moment is when industrial demand and investor demand collide simultaneously. Industrial users cannot wait. Investors do not chase gradually. They stampede. This is where stage 4 begins. And we are inches from that ignition point. Imagine the headlines when the first corporation openly states they cannot secure silver at current prices. Imagine a defense contractor unable to deliver because metal is unavailable. Imagine a government announcing emergency strategic stockpiling. The second that happens, the world realizes what the insiders already know. There is not enough silver for everyone. And in markets built on confidence, awareness is everything. Once belief breaks, supply vanishes. The transition from stage 3 to stage 4 always occurs suddenly, unexpectedly, violently. Look at oil in 1973. For decades, oil was stable. Then overnight gas lines formed, prices quadrupled, and the global economy convulsed. The catalyst was not the embargo itself. It was the realization that supply was finite and vulnerable. Recognition was the spark. Panic was the explosion. Silver is moments from that spark. Unlike oil shortages, you cannot ration silver consumption without halting critical industries. Unlike wheat shortages, you cannot import silver from another region because the world is running short simultaneously. Unlike palladium, you cannot substitute another metal without catastrophic performance loss. This crisis has no escape route. And here is the most important truth. Markets do not care about fairness. They do not care about stability. They respond to force. When demand overwhelms supply, price becomes the arbiter. And price does not rise gradually in a structural deficit. It leaps. The first buyers pay a little more. The next pay double. The last pay anything. Eventually, price decouples entirely from cost and becomes a measure of desperation. That is the future for silver. Think about what happens when the public finally learns that inventories represent only a few weeks of global consumption. Think about what happens when investors discover that paper claims were never backed by metal. Think about what happens when governments realize that losing access to silver means losing the energy transformation, losing competitiveness, losing defense capability. That realization is coming. Fast. When the correction arrives, the world will experience the largest repricing event in modern commodity history. The gap between reality and perception is too large to close gently. All suppressed energy releases at once. That is how parabolic events work. And now that you understand the stage we are entering, the next question is what happens when the illusion finally breaks. The answer is more dramatic than anything seen in markets for generations. When the illusion collapses, it won't happen gradually or politely. It will snap like a steel cable under decades of tension. One moment the world will believe silver is abundant and cheap. The next moment, reality will hit with the force of a shockwave, and when that shockwave hits, everything built on the assumption of infinite supply will reel in panic. Picture the scene. A solar manufacturing giant announces on an earnings call that production is being slowed due to difficulty securing industrial silver feedstock. Analysts scramble, headlines spread, industrial buyers rush to secure contracts. Price jumps violently. Then a major electronics company confirms similar concerns. Defense contractors request emergency reserve allocation from governments. Nations begin bidding against each other in the shadows of commodities markets. At that point, the illusion of stability evaporates. Exchanges try to maintain control by raising margins, increasing collateral requirements, and limiting order sizes. But these systems are designed for financial volatility, not physical scarcity. They cannot print metal into existence. When an exchange asks participants to accept cash instead of delivery, when contracts settle without metal changing hands, the message is unmistakable: the shelves are empty. And when investors understand that the paper game is over, the scramble for physical supply becomes a feeding frenzy. Investors who once bought silver casually will suddenly fight for ounces like survival. Not because they want to speculate, but because they finally understand the real role of silver. It's not just an industrial resource. It's not just a commodity. It's monetary insurance. It is the foundation of trust in times when trust collapses. For thousands of years, civilizations turned to silver when financial systems reached breaking points. History proves the pattern repeatedly. When empire debt grows too large, when currency debasement accelerates, when confidence cracks, people flee to tangible stores of value. And silver, with millennia of trust behind it, becomes a lifeline. The difference today is that silver is no longer simply a monetary metal. It is the bloodstream of modern technology. Every crisis in history involving silver was purely monetary or supply-driven. This time, both crises arrive simultaneously. A monetary storm meets an industrial hurricane. It's not just investors chasing silver. It's governments, corporations, energy providers, and infrastructure networks. Demand from these groups is not optional. It is existential. When someone says demand will fall if price rises, they do not understand this market. Think about solar infrastructure. Governments have legally mandated renewable energy targets. Utilities have spent billions retooling grids. Corporations and financial institutions are locked into carbon targets. These projects cannot pause because silver becomes expensive. They must buy silver at any price because the alternative is failure. Now combine that with investors seeking escape from currency turmoil. The result is a perfect storm. The The public will watch in disbelief as silver price surges past levels nobody believed possible. First $50, then $75, then $100. At $100, journalists will claim it's a bubble. Analysts will insist it's irrational. Banks will argue price must fall. But they said the same about oil at $30, at $60, at $100. They said palladium was overpriced at $500, then watched it hit $3,000. They said wheat spikes were temporary until millions starved. Markets don't rise because of opinion. They rise because of physical reality. Once shortages become visible, stockpiling begins. When stockpiling begins, scarcity accelerates. When scarcity accelerates, governments intervene, and interventions amplify panic. If you think the public reacted intensely to toilet paper shortages, imagine their reaction when the global energy transition is threatened. Every industrial nation will defend silver supply like oil in wartime. Export bans become inevitable. Strategic hoarding becomes mandatory. Trade alliances fracture. Nations without mining capability become dependent on those with reserves. This is where geopolitics rewrites itself. Silver-rich nations suddenly gain leverage. Countries like Mexico, Peru, and China become strategic power nodes. Major economies will attempt to negotiate exclusive access. Smaller countries may nationalize mines. Investment funds will chase mining companies globally. The race for resource dominance becomes brutal. And just like the oil crisis reshaped global power balance in the 1970s, the silver crisis will reshape the 2030s and 2040s. People assume substitution will save the system. It won't. Copper is not conductive enough. Aluminum degrades performance. Platinum and palladium cannot replicate silver's electrical properties. Synthetic materials don't exist at scale. Recycling is negligible because silver is dispersed in microscopic layers across devices that are not cost-effective to recover. And solar panels, the single largest source of future silver consumption, cannot return metal to supply for 25 years. That means everything we install today becomes dead inventory until the 2040s. A locked vault. Even if the world started building new mines today, with unlimited funding, meaningful production is a decade away. And ore grades globally are deteriorating. We are mining deeper and processing more rock to produce the same output. That is geological reality. You cannot legislate atoms into existence. You cannot subsidize physical scarcity away. This leads to the unavoidable conclusion. The world is heading into a structural deficit that cannot be resolved peacefully or gradually. The coming silver shock will be the largest wealth transfer in the history of industrial markets, not because of speculation, but because the world is waking up decades too late. Silver's true value is not $30 or $50 or $100. Its value is tied to the survival of the modern world. Imagine telling someone in 1970 that oil would someday exceed $100. They would have laughed. Imagine telling wheat traders in 1840 what was coming. They would have dismissed it. Imagine telling auto companies in 2015 that palladium would hit 3,000. They would have said impossible. Nothing is impossible when scarcity meets necessity. The most dangerous phrase in finance is, "This time is different." But for silver, this time truly is different because we are entering a crisis where both industrial survival and monetary stability depend on the same finite element. When the public grasps that truth, price will have already moved beyond reach. The window to prepare is narrow. Once the ignition spark happens, there is no catching up. This video is not telling you what to buy. It is not financial advice. It is something far more valuable. It is awareness. Awareness before the world wakes up. Awareness before the panic begins. Awareness before the greatest wealth transfer in modern history detonates. Now that you understand the forces converging, the next question is who controlled silver's price for decades, how they engineered suppression, and why the mechanism is failing right now. That story is even more shocking, and it exposes the biggest financial vulnerability of the century. If you want to understand the truth behind silver manipulation, the players involved, and the exact moment the system breaks, watch the next video. Turn on notifications. The window is closing faster than anyone realizes. The world is about to learn the real value of silver, and when it does, everything changes. Don't be late.